Well guys, before we get into today's featured presentation, I just want to say thank you for 500K. We hit it, guys. We did it. 500,000 subscribers. You gotta be kidding me, okay? Obviously, it's a pretty serious video we're talking about here today, but I just gotta say thank you, guys. That's a crazy number. I can't even believe it. You guys went ham yesterday. Usually this channel gets like 500 to 700 subs a day, and yesterday you guys went ham with this. So thank you, and as promised, I'm going to be smashing the thumbs up for you guys for all comments for the first hour of this video. I've reserved an hour out of my day. I'm going to just be smashing thumbs up like crazy, and you guys leave like ridiculous amounts of comments. So it's going to be a lot of smashing. I'm going to get some carpal tunnel syndrome going in my wrists, but I'm going to be smashing for an hour, okay? So once again, thank you guys. Like, that's just freaking amazing. That's all I'm going to say. Like, I never thought that was possible. So, all right, guys, so let's start getting into what today's video is all about. We're going to talk about, is it time to start selling stocks, start taking some nice profits here, or should we still be holding stocks? And what I want to go through is I want to kind of break things down on a very base fundamental level in a way that everybody can understand, okay? And we're going to go through that level first. And then I'm going to show you some graphs that are going to be quite startling to you. I'm going to show you some data in this video that I haven't shared in any other YouTube video in the past. And this data and these charts are really going to open up, I think, some of you guys' eyes to what is really going on out there, and, you know, kind of make a decision whether you should be selling some of these stocks or holding right now. So I hope you guys really enjoy this video. Smash the thumbs up as always. And by the way, I'm smashing the thumbs up for you guys. So let's get into this, guys. Now, why are we even talking about this? The NASDAQ composite broke 10,000 today. 10,000, an all-time high. Absolutely incredible number. This is why we're talking about this here today. The fact is, the stock market has been amazing. S&P 500 as of yesterday was actually up year to date. Okay? I mean, as of today, it's down, it's basically break even. It's down 0.6%, okay? It's basically break even. That is the most incredible thing I've seen in the stock market in my 11 or 12 years of being in the stock market. The fact that the NASDAQ is at an all-time high now is actually up quite a bit. And the fact that the S&P 500 is basically break even on this year. You know, it's the craziest thing I've ever seen in the stock market, okay? This is a great picture. I had to look for a picture to kind of exemplify what is going on in the stock market right now. The stock market's that guy there. He's like, there's nothing to see here. Move along. And you know, in the background, there's just craziness, right? In the background, you have mass unemployment, mass GDP declines, a massive recession going on that could lead into the depression. Profits of companies are horrible. Revenues are bad. You have, yeah, and we could go through a million different things. You have all that going on in the background. The stock market's like, hey, nothing to see here, guys. Nope. All-time highs. It's what it is. Look at it. It's a V. It's a V. It's a perfect V. The NASDAQ composite, you just pull it up, it is a perfect V. Absolutely incredible. I mean, and now it's actually a V more to the upside than it was to the downside. You look at the S&P 500, it's a V as well. It's almost completely completed now at this point in time. It's the most insane thing I've ever seen in the stock market. The fact that the market has come back this fast is just amazing, okay? And so now that we understand that, the fact is the stock market has priced in a V recovery in profits this year. Because remember, on a fundamental level, the stock market, at the end of the day, you know, short-term stuff can happen, volatility, market can go up a ton, down a ton, things like that. You know, different things can happen out there. But at the end of the day, over the long term, what drives the stock market? Well, it's just a fact of corporate profits, and corporate profits making sense for investors to get in some of these stocks, okay? And so the stock market has priced in a V recovery in profits this year, something very important, okay? Let me take you through a few stocks here that I think is just going to open up your minds to a few different things, okay? Look at this stock, Texas Roadhouse, for example, okay? This is a restaurant stock. This is actually a stock I've been interested in for quite a while. I've never been able to buy it, but I've always been interested in this one. Great restaurant company, okay? If you look at the stock price of this stock, it is higher than it was most of last year. This is so important that when we start breaking down the fundamentals and really understanding how potentially crazy this market has gotten. Think about this. The stock is higher now than it was most of last year. Last year, this company had revenues that were growing quite substantially, profits that were growing, comp store sales that were through the roof. I mean, the business was just amazing last year, absolutely amazing. They were, just accomplishing a lot and doing some great things. This year, you fast forward to this year, what do we have? Revenue is going to be down huge for the company. Profit's going to be down substantially. Comp store sales are going to be through the floor. Literally, I mean, think about this for a moment. Most of their restaurants have been closed, and now the restaurants are going to open. They're going to be at, 50% capacity? I went with one of my sons recently to the North Las Vegas Texas Roadhouse. It's pretty much the only one in metropolitan Las Vegas, so I had to drive way over there, that side of town. We went out to like a lunch dinner there one day, okay? The place was, basically every other booth was closed because you can only have 50% capacity. So it was kind of a sad experience too. And usually they do like line dancing, like the waiters or waitresses and whatever. They do like some line dancing every, 30 minutes to an hour or whatever. There was 2 of them who did it. Usually there's like 10 to 15 of them. There's just not that many employees on staff because the fact is they're at 50% capacity. And this is what's going on, okay? And yet the stock was what? The stock's pretty much at, higher than it was any point last year. How does that make any sense, okay? Uber Technologies, Uber Booba stock. This is a stock I used to own, right? Made really good money on the stock. I'm very appreciative of Uber for, ever. Here's a stock that is higher today than it was most of last year. Higher today than it was most of last year. Meanwhile, the business is being devastated right now, okay? I mean, you look at these numbers. The current quarter, which will be reported in the next, couple months, they're expecting revenues to be down about 30%, okay? That number, maybe it comes in even worse than that. We'll see, okay? Uber Eats is trying to save the business right now. If it wasn't for Uber Eats, this business would really, really be ugly. 13 to 14% revenue is supposed to be down in the fall quarter. Current year revenues are supposed to be down 6.7%. I'm going to be honest with you guys. I think that number is going to be much worse than that. I think revenues could end up being down 10% plus for Uber this year. I think double-digit down is more realistic. But regardless, it looks like a business in decline as of right now. And yet the stock price is higher than it was last year when this company was growing like crazy, right? Okay? Let me pick on a stock I own. You might say, well, you picked on a couple stocks you don't own. Pick on one you do own, okay? I will. I'll pick on the biggest investment I pretty much have, which is the FB, okay? The FB is way higher today than any point last year, okay? Now, I can make an argument that the stock was also very undervalued last year, but the fact is, ad rates for the FB are down considerably because businesses just aren't advertising the way they were last year, okay? And yet the stock is at a record high. It's higher, much higher than any point in the past year or so. How does that make any sense? The FB was supposed to grow their business 20% plus this year. Now the FB is going to have revenue growth of maybe 9%. And once again, the stock price is at an all-time high. It's higher than it ever was when the business was super strong. How does that make any sense? And don't even let me get into these type of situations like a Hertz Global Holdings where the stock files for bankruptcy and the stock price explodes higher over, a few days or something like that. Don't even let me go there with those type of stocks. That's just a whole different situation. I don't even want to get into that. That's just ridiculous. Okay, oh, we're going bankrupt, guys. Our stock's going to zero. Okay, let's push the stock price up to, ridiculous. I can't even go there. Okay, I can't even go there. Okay, so in order for a V in the stock market to make sense, which is what we've had. We have a V in the S&P 500 and a V in the NASDAQ. We need for a fast V in corporate profits, okay? Because at the end of the day, short-term stuff cannot make sense, but over the long term, things have to make sense, okay? Now, most corporate profits rely on what? Consumer spending, okay? You and I going out there and spending, okay? Apple doesn't make any money unless we go buy new iPhones and iPads and this and that, right? And all those semiconductor companies that sell chips to Apple, they don't make any money unless we go buy those iPhones and iPads and all those different devices. So the majority of these stocks out there, they rely on us going out and spending our money, right? Okay? And if we're going to spend money, we all need jobs, right? We need employment and things like that, right? So here's the thing we have going on, okay? okay, remember you heard about the unemployment rate dipping recently? Okay, here's an interesting article. No, the unemployment rate didn't really drop in May, okay? The BLS, which is a Bureau of Labor Statistics, let's just call them the BS instead of the BLS. I think that might be more interesting, okay? The BS asserts that nearly 21 million Americans were unemployed in May, attributing the decline to employers adding 2.5 million jobs in May as states allowed, quote, a limited resumption of economic activity. But it's not that simple. The unexpected decline in the jobless rate is based on a survey of businesses and households conducted over the week of May 16th. And the BS has also reported that nearly 30 million Americans have received unemployment insurance benefits in the same week. That's a gap of nearly 9 million people, enough to raise the May jobless rate 5.7 percentage points to 19% and much closer to economists' expectations. We have a divergence of what some government, and this is why there's so many, if you never understood why there's so many trust issues when it comes to unemployment rate and what you hear from kind of like these government entities and things like that. It's reasons like this. You hear, oh my gosh, the jobless rate dropped, this is great news, and then you really look at some more of the data here and you start looking at this and you're like, this doesn't make any sense, okay? It looks like, if anything, there should be a much higher unemployment rate than what we got, okay? This is why there's so many trust issues at the end of the day, and I've heard it forever. You know, I've always heard it from like friends or family members or acquaintances, you know, that basically say they don't even believe unemployment rate most of the time. They say it just lies, and at the end of the day, when you start looking at these numbers, you start just doing some math, all of a sudden you're like, wait a minute, yeah, this doesn't actually make any sense, okay? And so we need a fast V in employment, because if we don't get a fast V in employment, guess what ends up happening? People don't go out there and spend money, okay? It hurts consumer confidence in terms of people that do have money, in terms of thinking about going out and spending. And obviously, if you're that person that's unemployed, that's not it's not exactly the best situation for you, right? You just don't have money like that to spend, okay? And especially, this is true with something that is running out this fall. There's going to be something running out this fall that if jobs don't come back very soon over the next few months, there's a huge risk to the economy, okay? And it's that $600 unemployment, okay? Those checks will run out this fall for most people out there, okay? Most people out there, the majority of Americans that are unemployed right now that are getting those $600 payments, or some are actually getting a little more than $600 depending on different situations, okay? Those people are getting that right now, and they'll continue to get that because what the government has done basically until maybe potentially September, October. So that's going to be the time when all of a sudden it's like, whoa, okay, people need to be getting jobs very soon here, or those payments are going to stop coming in. If those payments stop coming in, things could get real ugly real fast in the economy, okay? So right now, the time is ticking, okay? Tick, 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 tick. People need to get back in jobs ASAP, okay? Because if they don't, it's going to end up being a real ugly situation for the overall economy, and we could be looking at double-digit unemployment rate for a year or maybe, several years in the future. And if you talk about that, you're talking about a depression, okay? That's a real depression. When you have unemployment over 10% for longer than 12 months, that would be a depression. And so we need jobs to come back ASAP. The time is ticking, and if those jobs don't come back, man, stock profits are going to get coal from Santa Claus this Christmas season, okay? That's all I have to say about that. It will not be a pretty situation at all. If people don't have jobs and those unemployment checks run out, it's going to get really ugly really fast. Because as of right now, there's just a mask over this whole situation, which is, obviously the PPP loans, you have the stimulus checks that have been sent out, and unemployment insurance. It's putting a mask up for the overall economy right now, and also the fact that, we can hide behind the fact that, most businesses are closed, or people are scared to come out because of Rona. We're masking it all right now. But the mask is going to start coming off here in the fall time, and then we're going to start getting some reality, and that's where things are going to get really interesting. Okay, you look at my city, right? LV, Las Vegas, right? Love my city. But at the end of the day, somebody in the private group posted all these pictures from Sunday. They were on the Strip, right? Strip's open again. They're posting these pictures, and I'm like, holy smokes, it's like a ghost town on the Strip. I mean, I was down there this weekend. That was on a Saturday. It was decently busy, but the only property I really went to was the Wynn, so I can't speak on the rest of the Strip. And I'm looking at these pics, and I'm like, whoa, and this is from many different parts of Vegas, and I'm like, dang, that looks pretty empty, okay? I doubt all the jobs are coming back on the Strip this year. I highly doubt it, okay? Unless all of a sudden everybody wants to take trips, everybody wants to get on a plane, which we're not seeing as of right now. Unless that happens, I doubt all those jobs are coming back this year. The best case scenario for my city is those jobs come back in 2021 or 2022, okay? And if not, maybe 2023, which now we're starting to talk 1, 2, 3 years into the future in hopes of those jobs coming back. That's quite a time in the future, okay? And that hurts me to see that, okay, at the end of the day, okay? So in terms of selling stocks, and we still got to go through some charts that are going to blow your guys' minds, okay? In terms of selling stocks, timing the market is usually a no-no. Like, usually it's not good to time the market and try to get in and try to get out and things like that. But I will say, we have a perfect scenario priced in for the market, which makes an RR, and no, we're not talking about Rolls Royce, we're talking risk reward. It makes it not that great, okay? The risk reward for this market is not that great considering the stock market itself has priced in the perfect scenario where unemployment comes down extremely fast, jobs come back extremely fast, consumer spending, comes back extremely fast. The stock market has priced in a perfect scenario. And it's a worst case scenario if you're really thinking about risk reward. You never want to be, really participating in a market that everything is expected perfect. And for that matter, honestly, stocks. When a stock's priced to perfection, guess what ends up happening? Usually they disappoint, okay? Usually it doesn't go perfect and that stock gets hit, okay? So at the end of the day, I have to say, but once again, we still got to go through some charts that are going to blow your minds, okay? I just want to give you my opinion, okay? Here you got to take profits in stocks that are near 2019 highs, basically, okay? That's my opinion. You kind of got to take profits in some of these stocks. You got to cash out some money. I've been cashing out some money recently, and if the stock market continues to go higher over the next month or two, I'll continue to take some more and more profits in some of these stocks. But the key word is if it's not a stock that doesn't have a 2x, 3x, 4x, 5x type opportunity, which most stocks don't have those type of opportunities, okay? Most of these stocks are not going to 3x, 4x, 5x, 10x their revenues over the next 5 to 10 years. That is the high majority of stocks in the stock market. They're not, okay? There's some very special situations, some very special stocks, and some of those stocks I hold that basically they're going to likely grow massively regardless of what happens in the economy over the next 5, 10 years. And so I have to hold those ones. But if you hold some of these, most of these stocks in the stock market that don't have those type of opportunities, in my opinion, what are you doing? It just doesn't make sense. A lot of these stocks they're at like 2019 highs when the businesses were super strong, and now the businesses are awful and they're priced like everything's going to be perfect, okay? And so in my opinion, unless it has a huge opportunity, you kind of got to cash some of these profits. And then where do you do with that money? You put that money in cash. And then you start looking for big opportunity stocks, those stocks that have massive opportunities. And you can't just buy any of those stocks either, because some of those stocks have ridiculous valuations on them in the end. But at the end of the day, you can't time high growth stocks. You just can't do it. That's too hard because they just trade differently, okay? Value stocks, much easier to time when the market's at ridiculous levels like it is right now and it's priced in a perfect scenario. But in terms of major growth stocks, you can't really get in and out of those. I've seen a lot of people, obviously we talk about Tesla stock all the time on the channel. I've seen so many people come and go in Tesla stock and try to get in and out of that one, all to be super disappointed. Like, oh man, I sold it at 600. I didn't know it was going to go up any higher. I thought it was going to fall back to 400. And it ends poorly, okay? It ends poorly if you try to do that with growth stocks. Most stocks in the stock market are not in that category, which means you're allowed to take some profits here and there, okay? It's a great saying. No one ever went broke taking a profit, okay? No one ever went broke taking a profit. And if you hold a value stock that isn't much of a growth company anyways, and you've made a bunch of money on it, man, there's no shame in taking a nice profit there and keeping that money either in cash right now or looking to deploy that in a stock that will actually grow revenues 2x, 3x, 4x, 5x, likely over the next 5, 10 years, okay? No one ever went broke taking a profit, okay? Now, I promised you some interesting charts, and let's get into some very intriguing charts if this hasn't been enough to kind of open up your eyes, because now we'll look at the actual data. okay? And we're going to see some startling data. This data is out of Yardeni Research, okay? I don't know these folks, but they do some very interesting research when it comes to forward PEs around the stock market, valuations, and things like that, okay? Let's look at this first slide here. This first slide here, the top one's going to show you S&P 500 large cap forward PE ratios. Look at it, guys. It's so much higher than any time in recent history. I mean, basically, we're talking about the next 12 months of profitability for these companies versus what the S&P 500 in general is trading at. It's so much higher than any time. 2019, 2018, 2017, you look at any time in recent history, and we're just so much higher, okay? On a valuation basis, that is scary. Look at the S&P 400 mid caps. So much higher than any time in recent history, guys. I mean, it's at extreme levels. I mean, people could have said, well, the numbers look pretty high in 2016, 2017. Well, big, huge corporate tax breaks were coming that year, so at least you had something to look forward to. Here we are so much higher than that. The corporate tax breaks already came. They're not going to be like another magical like corporate tax rate where they're going to say, oh, instead of 21%, now we're just going to charge you 0 or 11%. That's not coming. So here we are in a market that is insanely richly valued. Let's look at the S&P 600 small caps, guys. Look at the forward PE estimates. It has gone through the roof like we really haven't seen. We haven't seen it. Let's be honest. We haven't seen this any time in recent history. This chart goes all the way back to 2006. And it's literally off the chart, okay? Off the chart. This one is the most startling of all of them, in my opinion. What we're looking at here is a forward P for the S&P 500, okay? And look at how far back you have to go to find a time period where forward Ps were this high. You have to go back to the tech bubble in 2000, okay? This is where things get scary for me, okay? Just scary. When you got to talk about you have to go back to the tech bubble to find valuations this high, guys. Anybody that's in this market right now, you have to look at that and you have to at least consider the possibility of maybe taking some profits, okay? Especially if you're in some stocks that aren't huge growth stocks. You just have to look at that and say, maybe it might be a little intelligent to take a few profits here and there with the NASDAQ at 10,000. Maybe, just maybe. And maybe the prices go even higher. And maybe the valuations get even more out of whack. But at the end of the day, when you got to talk about we're at valuations not seen since the tech bubble, it's scary, guys. It is downright startling for me as somebody that's a participant in this market and has been in this market for 11 or 12 years now. That when I look at that, I'm like, wow, like that just scares me, man. It's not setting up for a good scenario. Look at this, okay? This might be the craziest one of all of them. Looking at the forward P of the Russell 2000. Look at all the numbers for the Russell 2000. They're so much higher forward P-wise than they have been any time in recent history. Anytime in recent history, and look at the growth category. And this is why you can't just buy any growth stock right now. You have to be very strategic in where you look for growth stocks, because a lot of these growth stocks are rip-offs right now, okay? Just complete rip-offs. But look at that forward P for Russell 2000 growth. It is at numbers like we have not ever really seen, okay? This guys, this has to scare you, okay? This has to scare you. I know we like to make, jokes about Fed go brrr and we love to make these jokes and the stocks only go up. But I'm telling you, this has a recipe for disaster written all over it. And I don't know when it's going to hit, but eventually things have to get to realistic levels. Because when you look at charts like this, it is so ridiculous. I can't even explain it. I mean, just the chart speaks for itself. That's all I got to say. The chart speaks for itself. If you don't want to just look at, forward Ps, look at the PEG ratio, S&P 500 valuation PEG ratio. So much higher. And keep in mind, this was done on the 28th. The market's gone up quite a bit since the 28th. So the number's even higher now. PEG ratio, way higher than any time. Even back in the tech bubble days, the PEG ratio is higher, okay? This is what you really got to look at and just say, my goodness, valuations have gotten ridiculous, just straight up ridiculous. And I know a lot of people that might be getting new, getting in the market and might be newer. You don't really know much about valuations, but it's not just about like buying a company you like. It's also about, are you paying a fair valuation for that, right? It's no different than if I went down to the store and I saw a pair of jeans there, and I look at the pair of jeans and I'm like, oh, it's a nice pair of jeans, and you're at Walmart and the price of the jeans says 25 bucks, and you're like, oh, I'll get this pair of jeans at Walmart for 25 bucks. But you see this other pair of jeans at Walmart and it's $2,500, and you're like, that's probably not such a good price, right? It's probably not such a good price. And that's what we have happen in the stock market, where people just forget sometimes that, oh, this is also about valuation. It's not just about buying a stock you like, okay? It's a seller's market, this market right now, okay? If you are a seller of stocks right now with the NASDAQ at 10,000 and the market's at all-time highs, you are in straight up a seller's market right now where the sellers have the full advantage. You hear this sometimes in real estate, right? It's a buyer's market or it's a seller's market. The buyers have an advantage right now or the sellers have an advantage. In the stock market right now, let me be very clear, it is a seller's market. You have the pure upper hand right now because people are willing to pay ridiculous valuations for so many of these different stocks that you can just get ridiculous prices for them right now. It's a complete seller's market. Somebody sent me a DM in the Discord last night. We were talking back and forth. Somebody that made a ton of money off, put options when the market was falling big, and then they made a ton of money on call options when the market was coming up. And we were basically talking back and forth. I think they made like a few $1,000,000, and like they did pretty well for themselves. And I was basically saying, this is a seller's market right now. We're not in a buyer's market. And they have a lot of money on the sideline. They're like, I don't know where to put the money right now. And I'm like, I agree. It's a complete seller's market right now. It's not a buyer's market. There are very few great deals out there. And if you're somebody that owns a ton of stocks, and especially a lot of these stocks that the prices have flown up on, you're just in complete control right now, man. You have the complete advantage over these buyers. I don't know when that's going to switch and the buyers will take control of the market. It could be a while from now, or we don't know when that's going to happen, but I can tell you this is a seller's market. And if you're a seller of stocks right now, you are in complete control because people are paying any valuation for these stocks right now. When that changes, who knows? But as of right now, people are willing to pay any price for so many of these stocks. It's absolutely incredible, guys. So I hope you really enjoyed this video. I hope you got a ton of value out of it, not just from looking at it on a fundamental basis, but thinking about it on terms of the data and really looking at the valuation numbers. So I hope you guys enjoy this. Make sure you smash the thumbs up. I'm going to be smashing the thumbs up for you guys for that first hour. Once again, thank you for a $500,000. That's flipping crazy. That's all I have to say about that, okay? Thank you once again. Thank you for watching and have a great day.